Good afternoon and welcome to our webcast on combining indicators and charts for long-term trading. One in a series of live events produced by TraderPlanet in collaboration with well-known industry personalities. Today is Thursday, June 3rd. Thank you for joining us today. This is Darrell, your host for today's session featuring Darrell Jobman, a senior analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Please also keep in mind that trading involves substantial risk of loss, and therefore may not be suitable for all investors, and past performance is not indicative of future results. We are recording this webcast, and it will be posted on TraderPlanet, so you will be able to review the material at a later time. You will also find previously recorded webcasts among our other free member education resources within our site at www.TraderPlanet.com. Our esteemed presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. While his passion is helping others succeed by teaching the do's and don'ts of trading, his editorial contributions to TraderPlanet has really allowed him to take this objective to a whole new level. We're happy to have him with us today. Let's give a warm welcome to our friend, Darrell Jobman.
Thank you very much for that introduction, Darla. We're going to be talking about a need to do a couple of housekeeping things first. The first thing I want to show, lower left raise, and there's a little triangle indicating a menu beside him. If you can hear me okay, just click in that menu and click on I agree. And that'll put some check marks up there so that I can know that what I'm saying is reaching. Hey, anybody able to hear me out there? Okay, not seeing any indication yet. Anybody agree I can hear? Okay, maybe you're all shy. Okay, it looks like we do have some audio, and there is some move ahead. We also want to talk a little bit more about payments, and the first thing is to indicate that our data for the charts that I'm going to be using is provided by CRB, and we're going to talk about their data and how we use it when in the software program that I'm going to be using. And then also, if you have questions, there's a little chat box down there where you can enter questions. I'll answer those, try to answer those at the end of the webinar. We'll not try to take them during the webinar, but we'll go through and then try to answer questions at the end if you have any. And when we do get to the charts, because we'll be talking about the points in some detail. When we talk a little bit today about the subject at hand, it's position trading, long-term trading, whatever you have. And in most of talked about using some of the same indicators for all those kinds of things. But today the focus is going to be on the longer term position trade. It's for those people who maybe like to have an active position in the market but don't like to jump in and out or whatever, just kind of a longer term view. So there are three real steps that we need to look at when we come into position trading. The first is getting into the position in the right place. We want to catch the trend. We're trading. We'll be trading trends or attempting to, and we want to get into an emerging trend early, and we want to get in. It makes it a lot easier as you move along if you have started your trade on the right track. How at some point there may be some reason to abandon that trend. So we have to make that decision as we're riding on that long stair step that we have there. On the in the photo at the right, then we get about that, or is there more to come? So we have to decide: are we going to keep riding those stairs to the top, or are we going to do things as we expected? Then the last thing, of course, exit. Exit is tough. Sometimes it's hard to tell when to get out of a trend, and maybe that trend is kind of being a little fickle and not giving you an indication of whether it's reversing or what. So we want to make sure that we get out, exit at a good point so we don't lose some of those profits that we have built up. At the same time, letting the profits run as much as we can as long as we're playing with the market's money. Stock we're going to be looking at today was kind of after the slide from the fall of 2008 until the market lows of 2009, it would take a while for traders to get a little bit better confidence in trading and decide that markets might not go down forever. We all know that if you have any, the stock indexes that spurted, that collapsed down into the lows of March 2009, then spurted higher. They dipped in May. We picked up the rally again a bit by June. But a lot of people that were not anxious or they weren't convinced to get some kind of, that there would be some kind of recovery. We are going to kind of ignore a few months there in the spring because of all the uncertainty and maybe let's even say the unlikelihood that you might even been interested in doing some this webinar with about the 1st of June a year ago. Now, always when you're looking at the market, the question always is, which stock should I buy, what stock indexes, all those kinds of things. That's kind of a little different type of discussion that will be the subject of webinars, but we have picked one that I would say would be a relative market that sold and people were so pessimistic in the general market disaster that we under the guys come from. Well, probably we could have found other things, but keeping in mind what was happening in Congress, it could have been healthcare stocks, of course. Financial stocks, since they had almost free money coming in, so it's easy to pick those best stocks, individual stocks out of the field of the thousands or so that are out there. Fund. The exchange-traded funds, the ETFs, real sector. Of course, we still have to understand that a sector can go through what they did in the lows in March 2009, but there might be some reason to think that the situation would improve. So our choice is the retail holders ETF, symbol RTH. As the stock market skidded, RTH plummeted to lows around 60. By June, it had kind of come out of the worst of that slump, and if anything was going to lift the U.S. recession, according to many market observers,